Hi everyone, my name's Darryl Panes, CEO of As Good As Gold Australia. And this morning, once again, I'm joined by another Brian partner. Thank you, Darryl, at As Good As Gold. And today we interview an absolute icon in the financial and precious metal space. I speak of none other, of course, than the one and only Bill Holter, precious metals broker with Miles Franklin. Good morning, Bill. Good morning, Bill.
Good morning. Good evening here.
I keep on saying this, Brian, but it's been a very, very busy time for us at As Good As Gold Australia, as I'm sure it has been over there for Bill in the US. I mean, we've just completed a tour with Lynette Zhang, which was remarkably successful, and so many people said,
what a lovely lady.
Yeah, absolutely. Very down to earth, engaged beautifully with the audience, and everybody just walked away and said it was the best presentation, the best involvement of it, the closeness of it all, I guess. Yeah, the interaction was the best they'd ever experienced. So we thank Lynette enormously for that. She was just sensational. Other than that, what I've noticed, and we keep talking about this, Brian, but here in Australia, we keep having reports coming back from us, from people who are trying to clear their funds, shall we say, from the banking sector and having enormous difficulty in doing so. They're being asked lots of questions. Why are you requiring you cash? They're even being asked questions if they're trying to put money back into their accounts, if it's in the form of cash. Yeah. So a lot of pressure on people at the moment, with their own money, of course.
Yeah, I mean, as little as $3,000 or $4,000 you want to take out, and they question, what are you taking it out for?
This is your cash. Unbelievable. So it just led to me wanting to discuss this a little bit further, because Greg Mannarino, just a couple of days ago, made reference to the fact, the subject matter was with him was all about bank deposits having reduced by approximately $1 trillion over the past 12 months to May of this year, and also the public, he said, are pulling out cash at a record pace. Now, this is going to have a big impact on the banking sector if it continues, of course. So I guess my question to you, Bill, is if this continues and develops, and Greg's saying it's on, it really is, do you believe that it could lead to the banks having the liquidity crisis, and what measures may they take to slow this down?
Yeah, well, I agree. I think it already is on. What's happening is the interest rates that banks are paying are lower than what you can get in T-bills. It's lower than what you can get in money market funds. So you're getting a natural flow that way. But you've also got people, because of what happened back in March and April with those four banks, and many people don't know that those four banks, the assets of just those four, totaled more than all of the assets of all of the banks that went down in 2008, 2009.
Wow.
So I think you've got some big money, some savvy people that have had uninsured deposits, and they're simply moving their funds into T-bills, direct Treasury direct, and that is a way basically to insure your uninsured deposits. So it's a natural reaction, and to lose $1 trillion in deposits, and it's only going to get bigger and bigger. The Fed is offering liquidity, and the use of that funding source is at all-time highs. It's never been this high. So there's already stress in the banking system, but it's not reported on. It's being smoothed over from an information standpoint, but that doesn't mean that it's not happening. It is happening.
Well, what our friend Mannarino was saying, of course, exactly that. He's referring to it as a quiet revolution, and it's just begun. And what he's saying is it's always better to act first, get in first. And in fact, he refers to the quote from the movie Margin Call, be first, be smarter. So it's always better to be first if you want to become unbanked. So your thoughts about that? I mean, get in and get it out before you can't access it. That's really what he's saying, isn't it?
Yeah, it's very simple. He who panics first panics best.
I might write that quote down.
So how long do you think we've got, Bill, before this could just be an avalanche?
Well, there's no way to tell. I just put an article out a week and a half ago. If you look pretty much everywhere you look, the pot is boiling. Whether it's and this doesn't obviously involve the rest of the world, although from a confidence standpoint it does. If you look at politics in the U.S., if you look at geopolitics, if you look at finance all over the world, if you look at societal issues, if you look at the rule of law, everything seems to be breaking down all at the same time. Can I tell you what or which of the 100 or more potential boiling points it will be? I can't tell you. If you ask me time-wise, I can't tell you, but I can tell you that everything seems to be boiling at the same time, and it's only going to take one event to blow the lid off of everything else. So the important thing to understand is you need to be prepared, because when this happens, it's only going to take 72 hours for your entire world to change. And either you're in place or you're out of place. And if you're out of place, you will not have the ability to get in place.
Yeah. So the decision has to be made very quickly. I myself have done exactly that, but well before time, I hope. And I don't care. I think we're talking about age right at the beginning there, Bill. And when you reach your late 60s and early 70s, I think you want to have, as you and Jim said, how much do you invest? Whatever you can't afford to lose. Nobody can afford to lose their asset base at the age of 65, 70, 75. No.
Yeah. Yep. I feel as though, Brian, we're on the edge of the cliff. And it won't take much
to knock you
over the side.
Yeah.
You just mentioned asset base, and it's important to understand that because the world today is based on credit, and all currencies are based on credit, the world no longer has a foundation that's real. 50, 100 years ago, we had a foundation of gold and silver as money. So the foundation was strong, it was thick, it was firm. The foundation today are credit or debt instruments. And all over the world, you're seeing interest rates rise. When interest rates rise, credit securities decrease in value. So what you're seeing is the foundation itself being hollowed out. And I think it's important that people understand your asset base, your foundation it's turning into sand right before your eyes.
Mm-hmm. Mm-hmm. Yeah, it's certainly not the right asset base by credit. Yeah, absolutely. And in fact, the next two questions I'm going to pose to you, Bill, is on similar lines. Bill, it has been 52 years since President Nixon took off the world gold standard. And that was only going to be temporary, but, it's now 52 years temporary. And as we know, as we can see, the world debt levels are becoming intolerable, in my opinion. Do you see the BRIC nations, and in particular Russia, moving forward with implementing a commodity gold standard?
I think that's 100% guaranteed lock. They are tired of performing trade where they give real goods and are paid in dollars, which are basically fake money. The trade is something for nothing, and the world is tired of something for nothing. So I think it's absolutely guaranteed that the BRICS nations, just because they want free and fair settlement in trade, they're definitely going to come out with some type of currency, some type of trade settlement currency that means they actually get paid and actually get settled on whatever trade. So the answer is absolutely yes.
Yeah, yeah. And I mean, you hear more about it with the currencies or the BRIC nations having their currencies buy the goods that they want. But I can also see too, those currencies are not much better than a US dollar, an Australian dollar, because they can be printed, right? So it's another example is that, would you like to be paid in seashells, or would you like to be paid in something that's had value for 5,000 years, which is the yellow metal gold? I think yellow metal gold is much better than seashells. Oh, thanks for that answer. Next question. Now I'm going to give you a few facts, but it's still based on the same format. So in Australia, we've had Lynette Zane, as we've spoken, speak to our clients, and of course the subject of debt came up, like it always does. Now there's a quote: "Debt destroys nations, not just sometimes, but every time." There's also another one, and I only thought about it last night. Didn't have enough time to type it in for this one, but I've written it down. It's a biblical quote: "You live by the sword, you die by the sword." And I'm reflecting that if you live by debt, you're going to be dying by debt. So there's another quote for you. But I myself presented facts on this tour with Lynette Zane about two US presidents. The first one, President Eisenhower, his reign was between 1953 and 1961. And he increased the debt level by $20 billion. That's a B, no other one, $1 billion. He was under a gold standard. So it actually increased by 0.9% per year. Then we discussed President Barack Obama's term from 2009-2017, same period, 8 years. And his debt increased by 8 trillion, and that's with a T. Right now, just to get the facts right, a trillion is 1,000 billion. So he increased it by 8 trillion, which was not 0.9% as Eisenhower did, but 8.75% every year. We got to remember, gold comes out of the ground at 1.6% per year. Now we are hearing from the US Treasury Department that in the last 6 months of this year, 2023, they will need an extra $1.85 trillion to pay the bills. Bill, in your opinion, what effect will this have for the future of the United States?
Well, what you just illustrated is the math does not work. I mean, we're getting to the point now where the interest alone on the debt is $1 trillion a year, and that's only going to grow. It will not decrease. Now, what is that 1 trillion? What do you compare that with? You have to compare it with tax receipts. So at this point, the interest on the debt is the largest expenditure of the US government. It's even larger than the military budget, which is greater than all the military budgets combined in the rest of the world. So what you're talking about is you're basically illustrating the mathematical equation that cannot work. I mean, we are mathematically running into a brick wall that it is unsustainable. I mean, just go back 30 years ago, 40 years ago, when any nation anywhere in the world got to 100% debt to GDP, they were considered a banana republic, and their markets would be attacked, their credit markets would be attacked, and their currency would be attacked. Here we are, 2023, and you've got basically globally, it's a 300% or 300 debt to GDP ratio. The US is 135% debt to GDP, and the dollar is the world's reserve currency. So what you can take away from that is the entire world is a banana republic. And we've not even talked about the other part of a banana republic is the rule of law breaking down, but you see that also. But just mathematically, the world in its entirety is a banana republic, and all currencies on the planet are basically worth zero.
I find it unbelievable. You made a statement that the interest payable is greater than the Defense Department or military budget, and not only of the states but of the world. I mean, you cannot. You cannot move forward if you are locked into paying an interest level of that much. It doesn't matter how much money you print, whatever you do, whatever you print, you're going to be worse. It's not going to get better. It's got to be worse. So that's staggering. It really is staggering. Any comments, Darryl?
Which is why, this leads me to the next question, really. And I know that we've spoken about this a few times, Bill, but I think it just needs to be emphasized over and over again. Because at the end of the day, we've got 1.5% of the Western world population investing in precious metals. It's not a big number. So we've really got to get the message across. You've said, along with Jim Sinclair many times, that you need to become your own central bank. And my point is this: now that many more central banks are purchasing gold in a much bigger way, that, this quote of Jim's becomes more applicable now, I think, than ever before. Would you agree with me on that? And then just explain to the audience in your point of interest how owning physical gold can lead to having more freedom.
Well, yeah, as far as the central banks buying gold, do what the central banks are doing. Don't do what they're telling you to do. I mean, central banks are buying gold for a reason. They understand that there's only a short timeline before the dollar craters. And what is the dollar? Roughly 60% of reserves that central banks around the world hold. So that is going to be a huge smoking black hole of zero on balance sheets of central banks. And what they're doing by buying gold is they're trying to own something that will call it explode in value, whatever you want to call it, to fill up the big black hole that's going to come once the dollar collapses. So do what the central banks are doing. Don't do what they're saying or telling you to do. As far as becoming your own central bank, you want to get your assets out of the system. The system is in its entirety is all about liabilities. Everyone, every bank, every entity either owes or is owed, and those debts are not going to be paid. So when the music stops, if you're not even on the dance floor, you're insulating yourself from liabilities that are failing within the system. And to get out of the system, how do you do that? If you own stocks, call your broker and have your broker either send the shares to the transfer agent or have the shares issued and sent to you. That way you don't, if your broker goes down, your shares are on the broker's books. Your shares are on their balance sheet. They own the shares for your benefit. But if your broker goes down, it could be years or maybe never that you get your shares back. You want to exit insurance contracts. You want to exit having money in the bank. In the U.S., if you put money into the bank, it's not a deposit. What it is it's no longer your money. It's the bank's money. And if they fail, if the bank fails, written in law within the FDIC, they're not going to do bailouts. They can't possibly mathematically do bailouts. They will do bail-ins, and that is the law now, is that they're going to do bail-ins. And what that means is they're going to take part or all of your money to save their own asses. With gold and silver, if you have gold and silver in hand or in a private non-bank vault that's out of the system can go down and you still have wealth. you will have wealth when the system starts to come back up. And those that own gold and those that own silver on the backside of what's coming, I guess the best way to describe it is those that own gold and silver will become mini banks themselves, because that's going to be the collateral for whatever type of new currency ultimately comes about after everything collapses. And when I say ultimately, they definitely are going to try to come out with central bank digital currencies. And I believe those are going to fail because they're no different at all from fiat currencies, with the exception of everything that you do can be tracked. But there will not be confidence. I mean, if the US goes from a dollar, the dollar the way it is now, to a digital dollar, what has changed? Has the financial position of the US Treasury changed? No. By the time we get the central bank digital currency, the Treasury will be even in worse shape. So they're definitely going to come out with a CBDC, but there will be some type of new currency on the backside. And any new currency is going to have confidence behind it. And the only way to build confidence is to back it with some type of real asset. And the best real asset to back a currency with is gold and silver, because they are money. Oil's not money. Wheat's not money. I mean, you could go down a list of commodities. They're not money. Gold and silver are the definition of money.
Yeah. Yeah. Oh, great explanation. I'm all in. It's, as we have been for the last 30 years. But interestingly enough, and it's with reference to the performance of gold, it's, I mean, you try and explain this to people, but it's up 750% since 2000, since we really started to save in gold. And the only maintenance we were required during that period of time, Bill, is a feather dust.
No risk.
With no risk.
With no risk.
Yeah.
That's the important thing. Everybody forgets about risk versus return.
Oh,
You
yeah,
had
right.
just about the best return, and you haven't taken any risk while doing it.
None.
That's the definition of investing.
It's spot on. And Bill also mentioned that, because you asked him about freedom, and Bill actually answered that question on freedom, but didn't mention the word freedom. He said your ability to be able to go to your private vault, or whether it be at home or with an established private vault at any time, to take your silver and gold, to use your silver and gold. And that's your freedom that you have, because there's no government controls on that system.
Yeah.
Right.
Yeah. Now, I know a house that I sold 15 years ago is up for sale again with the new owner. And they told me that they've spent $400,000 on the property since they purchased it from me. Now, that doesn't mean to suggest that I left it in a terrible state. But that's just the cost. Don't take it away, Bill, of ongoing maintenance. But the maintenance with my gold and your gold and anyone's gold is the cost of a feather duster, just to keep it looking smart.
Exactly.
Unbelievable.
It does create, maybe if you leave it there for 10, 15 years, a little bit of dust, you brush that away, and it still shines like crazy.
I know, we've got a million questions, but we've got time against us. You've got one to go, so let's do this one, Bill. Explain to our audience, why does a gold or silver standard stabilize our commodities price range? Now, I'll give you a couple of examples, and they're very, very good ones. A barrel of oil price is down 30% in the last 70 years, with the price of gold paying for that barrel of oil. Down 70% in the last 70 years. I think in US dollars, it's up 2,700%. The second example, 70 years ago, it took 4 ounces of silver to fill your car's gas tank. And today, if you work out the price of silver, it still takes 4 ounces of silver to fill up the petrol tank or the gas tank. So what is happening? Why does silver and gold do this?
Yeah, silver and gold don't do anything. an ounce of silver or an ounce of gold that was mined and minted 100 years ago is still that same ounce of silver or ounce of gold. What does change is the currency. The currencies over time, if they weren't printed, they wouldn't be volatile. But because they print so much new currency every year, each and every year, they've been debased. So it's not gold or silver that change, it's the currencies themselves. Now, there's always going to be a relation between gold and oil or gold and coffee or gold and whatever commodity you want to talk about. And those can move and they do change over time, but they don't change as drastically as the value of the currencies. So I guess what I'm telling you is by using the currency as a measuring stick, that's a faulty way to look at things, because the currency itself is not a set, it's not a set measuring stick. It's not a set yardstick. An ounce of gold or an ounce of silver is an absolute hard and fast yardstick. And you mentioned a biblical verse earlier. Think about in the Bible, it talks about true and fair weights and measures. Fiat currency is not a true or a fair weight nor a measure.
No, 100%.
Yeah. Look, I've got, as I said, about another 16 questions here, but I know that we're time restricted, so I won't do that, not to Bill. However, I would like to close by saying that, or just bringing back a gentleman's name, one that we admired enormously, a gentleman by the name of Charlie Tremendous Jones. Charlie used to say, in 10 years' time, you'll be in exactly the same position you're in right now, apart from two things: people you meet and the books you read. This morning, we have been speaking with Bill Holter. I'd have to agree with everything that Charlie said. You take those 2 points out of the equation, take people out of the equation, take reading material, education out of the equation, you've got nothing left. But the opportunity to connect with people like Bill Holter is extraordinary, if you can do that. And the point is, I know that Bill can be contacted. So, Bill, if anyone would like to make contact with you and know more about gold, where to acquire it, what do they do?
Sure. You can go to my website. It's simply billholter.com. There is a contact box there if you want to reach me, or you can go to directly to my business email. It's bholter@hotmail.com.
Look, I would recommend, and we have 30,000 people viewing this on a regular, our interviews on a regular basis, and what an opportunity! I've got to say that, what an opportunity to connect with somebody like Bill Holter, expand your vision a little bit, and just life is a learning process. It really is, and if you do that, you connect with Bill, you will continue to expand your mind and progress. And we all need to progress in this world, because the only other alternative is to go backwards, and that's not a good option. So, Bill, thank you so much for your ongoing support of this channel. Really appreciate it. And I'd say, and until next time, viewing audience, by the way, I've got to say this, our viewing audience is wonderfully supportive. They are fantastic. We thank them so much as well. And so until next time, all of us, stay well, stay focused. Goodbye for now.
Goodbye for now.